Good afternoon, welcome to GrainTV. My name is Cody Bills, this is Logan Burgess. Today is December 2nd, a Monday. And we had a bit of a mixed trade here in the grain markets. Corn trading unchanged on the day. Soybeans for January trading down 15 1/4 cents. Wheat in Chicago down 7, and Kansas City wheat following right behind it down 3 1/2 cents. We did have export inspections this morning. Was that the reason why we traded lower here for beans?
You know, I certainly think it got the soybean market off to kind of a weak footing. Take a look here at the model we've been watching throughout the marketing year. Red bars here are weekly export inspections, and the green line is the pace needed to meet the current USDA expectations for exports. As you can see here, over the last 5 weeks, we've had exceptionally strong export inspections. Today's number met the seasonal pace we need, but certainly quite a bit light compared to what we've seen here really as the soybean market's been moving higher over the last several weeks here. So I don't think that helped out things on starters. If we look at Chinese demand too, there was some concerns about that as well. Basically a concern that the Chinese are going to be turning away more U.S. shipments of corn and soybeans as they get a little bit more strict about the GMO quality that they require in government stock. So both those stories, I think, got it off from kind of a weak fundamental standpoint, and then it seemed like the technicals kind of fell out of bed here as we moved through the day.
Yeah, absolutely. But I think really a lot of this had to do with the fact that on Friday we had very light trade volume following the Thanksgiving holiday. In that light trade volume, we ended up trading up sharply on some strong export news.
Yep.
Now, I think that was a little bit overdone in the overnight session. We ended up trading up even higher, all the way up to 1346 in the earlier part of the day. Of course, when the market opened up, that's when we saw most of the selling pressure. We ended up closing down near the lows, closed down at 13.19. That's 27 cents of selling pressure in a very short period of time. Most of the rest of the day, it just chopped around near the low side of the range. But by the end of the day, we were closing out almost near lows. So quite frankly, I think this is a very bearish sign, at least for the near term. I think next stop, $13. I wouldn't be surprised if we see selling continue tomorrow in the soybean market.
Yeah, you know, if we look at the action in today's trade, Cody, kind of a little bit of a different story for corn. If we take a look here at the daily chart of the March 14 corn future contract, you can see here that similar to soybeans, we had some very strong selling pressure in the market, but the bulls really fought back in today's session. And you can see here that we actually moved a little bit higher. The settlement price was unchanged. You know, before the show, Cody, you said that if you just look at the settlement, it wouldn't really tell the story in today's action. This corn market tried to make new lows. 420 once again acted as support here, and I think right now we're seeing a little bit of a sentiment change in the corn market. Exports remain very good. We saw that confirmed today by the export inspections report. Take a look at the model here for corn. Similar to soybeans, red bars here are the weekly export inspections figures, and you can see we saw the strongest export inspections report for corn today that we've seen this marketing year. So a lot of people now are starting to think that demand's returning in a meaningful way for this corn market. We've certainly seen that by way of ethanol numbers. So it does seem like a time period right now which is maybe hold off on pricing corn for the moment, but get a little bit more aggressive with those soybean sales.
Yeah, and you know, if you look at the price action too, corn, you know, I think there's definitely potential here for corn to pop a little bit in the coming days. You know, the price action today, I think it was is very supportive simply because we made new lows on the daily chart. We pushed down through the lows. It was almost like a breakout, but it failed. We caught people. I'm sure there's people that are short that's still in that, caught in the wrong side of this trade, and I wouldn't be surprised if they have to get out and we see a little bit of buying pressure coming into the market. I wouldn't be surprised this week if we see corn relatively strong in the grain complex with beans having a little bit more selling pressure. That's kind of a switch of roles here from what we've seen in the past month.
Yeah, certainly. Well, coming down the pipe here this week for the grains, we're going to be seeing export sales on Thursday, ethanol numbers out on Wednesday, and then really the big next report for this grain market is going to be the December WASDE report. Certainly looking at our models here, a lot of people are looking for the USDA to have to make export expectation revisions in that report, and that seems to be helping things out over the last couple of sessions. Keep a close eye on export sales, though, on Thursday for more direction on that. Thanks a lot for joining us here on GrainTV for a Monday. We'll be back here Tuesday to break down the action.